everyone. Welcome to Home Buyers IG Live. My name is Dora with Generational Moves, and I'm here with Mario with Homebridge. So Mario, tell us why we're here
Well,
today.
thanks for having me, Dora. Well, everyone, my name is Mario with Homebridge. We're here to answer frequently asked questions that Dora and her team have received as in regards to the loan and mortgage process.
Okay, awesome. All right, and we're gonna go ahead and answer any frequently asked questions. So are you ready to get started?
Yeah, well, actually, I guess nobody really knows who Homebridge is, or they may not know. So
Let's
let's
please
talk
tell us a
about
little
that.
bit more
Okay.
about Homebridge.
So, everybody, Homebridge Financial, we're here locally located. We are the third largest privately held mortgage company in the nation. We're a direct lender, meaning we lend out our own money, which is really, really cool because it allows us to have some of the most competitive rates and answer to only the government. So it's pretty cool. We specialize in all your standard Fannie Mae and Freddie Mac loans. We specialize renovation and rehab loans, doing those in 30 days. And of course, we have a list of non-QM items, things like that. The key thing is you're going to know who I am, who your underwriter is, who your closer is, your processor is. You'll know them by name. You'll be able to text them, and we'll be able to close on time every time.
That's super important. So yeah, thank you, Mario. Thank
No
you for
problem.
being here today as
No
well.
problem. Thanks for having me.
All right, so let's go ahead and start with the questions. One of the most popular questions we always get is, and it's the first one, is what do you need to qualify for a loan?
Oh, okay. So that's a very good question. So it's 100% going to be tailored to the buyer, but there's always like 4 basic things, sometimes 5, that we need. It's just going to be your ID, 30 days of pay stubs, 60 days of bank statements, that could be checking, savings, 2 years of W-2s or 1099s. And if you're a business owner, an entrepreneur, you do Schedule C deductions. Like if you're a realtor and you're writing off things, we look at 2 years of your taxes. And then from there, any growth on that list will be like if you're a veteran, things like
So question number 2, what is the minimum credit score?
the minimum credit score. And that's a great question. So after COVID, that's completely changed. So
Yes.
we have 2 main categories, FHA and conventional. Of course, you have VA. VA falls in line with the FHA credentials, but you can qualify for a loan through FHA starting at 620.
620?
Yeah, and then
Okay.
conventional is going to be 640.
Okay, 640.
And then I guess later on, I know we're going to cover a little bit like what COVID's done with those requirements. But essentially, from 620 up, we can look at your FHA options. 640 up, we can look at your conventional options. And even 640 up, we can also do FHA. It just kind of depends.
Awesome, all right. What is the debt to income ratio?
DTI. So
what's DTI?
yeah, look, guys, I love numbers, but God bless the calculator. So DTI is not that difficult. Here's the best example I'll give every single one of my clients. You make $100 a month. That's your income, right?
Okay.
Your house payment of the house you want to buy plus your revolving debts, that's going to be car notes, student loans, credit cards, things that are reporting on your credit. That's going to be your debt. So your debt to income ratio. So let's just talk a normal FHA loan. If you make $100 a month, your house payment and your monthly bills, the minimum bill payment has to be $57 and below for 57%. Conventional could be $45 to $50. So that's the percentage. So that's easy math, easy way to figure it out.
All right. I know that, a lot of people have, student debts and all that stuff, so that's gonna probably take into place.
Yes. Yeah.
Okay.
Yeah. Student loans. I guess let's talk about student loans real
Yes.
quick. So a lot of the things with COVID-19, the forbearance programs that are in, repayments do not go back into effect until January.
Okay.
But even if it's deferred or in forbearance, we have to take rule of thumb. We take 1% of the what's owed on that loan, and we apply it to your debt to income ratio, your DTI. So if you owe $1,000 and you don't have to pay it, well, 1% is what? $10. We get that done, and we add that to your DTI. So $1,000 loan and forbearance, we have to put that $10 a month payment in
Gotcha.
there.
All right, that's cool. So now that, let's say, great credit, the DTI is not too high, it's at where it needs to be.
Mhm.
The other question that a lot of people want to know is, are there any down payment assistance programs?
There absolutely are. So down payment assistant programs are kind of twofold. So the idea is that you get a percentage or a grant towards your loan amount. So if you buy $100,000 house, you put 3.5 down, go in FHA. We call it DPA, down payment assistance. Go in FHA DPA. Your loan is 96,500. So your grant would be 3% of that,
Gotcha.
and that gets applied to your closing costs, your cash to close.
Okay.
It's a hybrid underwriting process. So we underwrite it in house, and we have to send it to the programmers or the program to underwrite. They send it back. Once that's done and we have CTC, they send that money to title. Now the catch is you get this grant, but they dictate what your interest rate will be. So for some buyers, if they're higher credit score, they many times will get a better rate than the down payment assistance program. So at that point, it's just, again, on a case-by-case basis. Every loan is a snowflake. They look the same, but are very unique when you look at them. Having that conversation with the buyer
Yes,
and
exactly.
seeing what's in their best interest, but just letting them know they have those options if they need it.
Yes, and I get a lot of people, what is it? What do I need for cash to close? What's the down payment? And I always let them know, like, we need to have a one-on-one, and the most important part is you need to speak to a lender and kind of get all that information down, because it is different from loan to loan.
It really is, yeah.
Okay, so what are the lender fees that you guys
That we do. So we're what you call a flat fee mortgage lender. So your underwriting fees and your administration fees. So basically the fees that keep the lights on, like this building, those are going to be the same if you do, for sake of the conversation, a $1 loan and a $1 billion loan.
Oh,
Yeah, so it's just the same. There's no fluctuation. The only time any lender fees will change is if our client decides to buy down the rate, or sometimes, I guess you would say, even buy up the rate. They're short cash to close. There might be the option of them selecting a higher rate to get a lender credit,
Gotcha.
and they could apply that to closing.
Okay, awesome. Okay. So this goes for like all the people that are already homeowners, maybe your parents, or you currently own a home and you'd like to refinance. Mario, how can I refinance my home?
Oh man, so it's a little bit in depth, but so we can definitely let's break it down to two categories. One, the best practice, rule of practice, is we bring on a full file just like we would for a purchase.
Okay.
We have to verify your DTI, again, your debt to income ratio, your credit score, and all that. Get an idea of what the value in the house is,
Okay.
and that's the best practice. There's also another ballpark practice depending on the feel of the buyer. That's that one-on-one I have with them, and they just want to get an idea. Then I just get their mortgage statement and like what their homeowner's insurance is, their HOA information, and I kind of do what's called a pressure test.
Okay.
And so all that leads to two conclusions. One, we can do a rate term, which is just focusing on lowering the rate
Okay.
and lowering the loan amount. So the loan amount will only go up if you want to roll in closing costs or even costs for the rate.
Gotcha.
And then the other one is a cash out refinance,
Okay.
what I like to call debt consolidation,
Mhm.
where you pull out of the equity and value of your house, and you can use that to pay off that cash. You can use it to pay off credit cards, cover your closing costs, cover your rate, pay off your car note.
Awesome.
Things that have higher interest rates,
Mhm.
a credit card at 15% interest, you're gonna
Yeah.
spend more money on that
Yes.
versus a house at like a 2.5% interest, even if it's amortized over 30 or 15 years.
Okay.
That's basically refinance in a nutshell.
Yes.
And then once we talk to the client, I figure out that unique situation and what's best for them.
Okay, so they're pretty much, kind of submitting an application as if they were, whenever they bought their home, they're submitting a loan out,
Right, that's the best practice, but sometimes for like, right now actually I have one where
Okay.
they just send me their mortgage statement, and later on today I'm just gonna be doing a quick pressure test.
Okay.
They just really wanna know if they should do it now or they
Yes.
should wait.
Okay, great. I know with COVID and everything, the whole market has changed, from interest rates to prices of the homes as well. How has COVID changed in your business?
Oh, well, I think we can all say we've all had, in fact, from a realtor side, from a lending
Yes.
side, even on the title side. The cool thing on the title side
Mhm.
is that almost all of our title partners that we have, they're covering mobile notary costs for
Yes.
free, so that's pretty cool.
Yes.
So from the lender side, first thing right out the gate is the credit qualifications have changed. January, you can do an FHA at 580, now it's 620.
Yeah.
Conventionals kind of stayed the same.
Mhm.
Now to dive in a little bit on FHA, from 620 to like 660,
Okay.
their debt to income requirements may or may not be less depending on their unique situation. They may require additional reserves,
Gotcha.
things like that. A reserve is having, after you close, having like 1 month reserve would be 1 month of your house payment in your account after you close.
Got it.
So you might need 2 or 3 month reserves, things like that. Very unique to that borrower.
Mhm.
And then, of course, on the business owner side, one of the biggest things, and I know there's probably other lenders seeing this and they're probably smiling at this,
Mhm.
is when you get a business owner or sometimes even somebody that just does Schedule C line itemized deductions, a 1099 employer,
Mhm.
you have to get their P&L. You have to get and P&L is a profit and loss, so you have to get their year-to-date 2020 P&L,
Mhm.
and you have to run that to make sure that they're still growing at the pace of their 2-year average.
Yes.
And if there's any fluctuation, then we have to do letters of explanation, things like that.
Okay.
Definitely still possible. I've done plenty of business owners since post-COVID.
Mhm.
But those are, I feel like, the two biggest ones.
Okay.
Rates, guys, rates are gonna stay low.
You
They
think
just,
so?
yeah, I'm like, 100% certain. I mean, they're gonna be, unless something happens in Washington, but they're gonna be, everything's looking at like they're gonna stay in the 2s and 3s, and some people are even chatting that they might drop even to the 1s. I'd say we at
Wow,
least
guys.
have, I mean, even Harris County, right? HAR is saying, HAR just came out saying how much we're gonna have a real estate boom even here in Houston,
In Houston.
next year.
I believe that. I
So-
definitely believe that.
So it's gonna be pretty cool. It's gonna be a
Awesome.
great year. 2021, 2020 is gonna be, it taught us what? How to be strong
Oh,
and make it
yes.
and survive.
Yes, we're
And-
survivors at this point,
Yeah, we
guys.
absolutely are. So, yeah, I mean, I would say those are the biggest things.
Okay. So a question, if, let's say you've lost work this year,
Mhm.
you know, either your hours have been cut, your pay has been cut, or you probably just stopped working, you know, how will that affect you
Oh,
in
actually-
approving for a loan?
Yeah, that's actually a very good question. So we'd have to go with post-COVID guidelines. Those are like some of those one-on-one things I was talking about. But let's say somebody got laid off, furloughed, and they just got back into work,
Okay.
right?
Yeah.
FHA will let it roll, will move forward with it if you have 6 months of that new employment. It doesn't even matter if it's like the same line of work.
Okay, so
So
you have to have 6
you have to have
months
6
working
months.
there, okay.
And then for conventional, we can do 1 month if it's in the same line of work.
Gotcha.
And so,
Okay.
and if it's dropped, we have to go off the lower amount. Like if your profit and loss, for instance, like a business owner,
Mhm.
if it's showing that you're at a loss, but your 2-year average was higher, we have to go with the lower number. And the
Yeah.
whole idea behind all this is because like all the forbearances that were applied during like the height of the quarantine,
Mhm.
the government is trying to stabilize the housing market
Yes.
and keep it from falling, and that's what we don't want. So all these guidelines are just to secure a better loan for like the secondary market and things like that.
Okay. All right. Yeah, that's awesome. Thank you so much. I kind of want to see if anybody has any questions. You know, it seems to me that 2021 will go in strong, and hopefully it'll remain that way.
Think so.
You know, I'm super excited. You know, I work with Mario. I typically send him anybody that I'm working with. I'll send him to his inbox. That way he can get in touch with you guys. Set up a meeting, a one-on-one call,
Mhm.
and kind of see if that way he can talk to you guys, answer any other questions, and if, once you guys are ready, you know, run an application and get the loan process started.
Absolutely. Guys, if you want to reach out to me and have any have what I like to call buyer's consultation, you can. My cell phone's 832-275-3798. My email is very simple, Mario, like the video game, Super Mario at homebridge.com. And then you can follow me on Instagram at
Yes.
txmortgageguy.
Yes, and I'll be putting all that information in the description as well. And my phone number is 832-661-1293. And my email is dora@genmoves.com. And you guys have all that information in my bio. Please feel free to DM me, contact me, as well as Mario, and we'll be super happy to work with you guys.
Well, thanks for having me, Dora.
Thanks for having me. Well, thanks for coming.
Yeah. Hey, let's go grab some coffee.
Yes.
All right, bye
coffee,
guys.
coffee.
Thank you so
Bye.
much.